Hello everyone, welcome to this trade breakdown on EU. In this video, I'll be breaking down a trade signal that I gave inside the group on Monday. I'll go over the thought process behind it, how I generated that trade, and exactly what the reasoning was behind my high time frame directional bias. Moreover, I'll explain how I built a market context around that setup, and how I combined all of these different key aspects to come up with that R. I'll walk you through all of those important elements in this breakdown. So let's get started with the breakdown by first of all looking at the weekly time frame. On the weekly time frame, you can see that since September, price had this huge expansion leg lower. With this expansion leg, price moved down into the discount region of the entire dealing range. Within that range, it came down and tested this mitigation block. Along with that, it also tested a refined weekly fair value gap. On top of that, we had an SMT divergence with GU. You can see that we had this low on both EU and GU. What EU did was come down lower, taking out its previous low and forming a lower low. Meanwhile, GU failed to take out its low and instead formed a higher low. This created a discrepancy between the two correlated assets. That discrepancy suggests we have non-symmetry, and when we see non-symmetry, it indicates that market makers are actively participating. Because of that, we can expect either an expansion or a reversal from this point. Since we are in the discount region of this entire dealing range, and we've also tested this discount key level, we can expect a reversal from here. After this expansion occurred, you can see that when we were inside the discount region and tested the discount key level combined with the SMT divergence, our job was to first determine where price might go next. The least target we could expect for price would be a premium key level. Inside the premium region, the first key level we identified was this weekly swing high. So when we were positioned here, our first point of interest or target was this swing high. This was the minimum we could have expected price to reach or take out. After all of these key supporting factors and elements aligned, price reacted higher and pushed up until this point. Following that, we saw a small retracement lower. With that retracement, price tested the weekly fair value gap, and again, we observed another reaction to the upside, continuing until the previous high was taken out. This week, we opened right here. Around this area, my objective was for price to first take out this swing high, and then eventually the next swing high. So my directional bias for this particular week was bullish. I was expecting price to move higher and take out those swing highs, which were my drawn liquidity levels. At this point, my directional bias remained bullish. I was expecting price to expand further, or in other words, for the weekly range expansion to occur to the upside. Now what I'll do is take this idea down to the daily time frame to see if I can find any other supporting factors, and whether the lower time frame price action aligns with my higher time frame bias. You can see that the weekly candle opened right here, and on Monday I gave you the trade signal right around this area. I'm going to use this so it looks a bit clearer. Here on the daily time frame, you can see that we have the same narrative and market context. We had the SMT divergence with GU, and after that divergence, price expanded higher. Now looking at this structure right here, you can see that price almost took out this swing high. But before it could, we saw a retracement lower. Because of this retracement, equal highs were formed around this area, which led to even more liquidity being generated above both this swing high and the one before it. The retracement resulted in the formation of these equal highs, making them an easy target for price to take out once the retracement ended. During this retracement, price took out this swing low, which indicated that we entered the case of death phase of this move. We had this last sweep where price took out the swing low and at the same time tested the discount order block. These were the two key supporting factors that led me to believe price was going to expand higher from here, first to take out this swing high and eventually the next one. This is the exact thought process I had outlined and explained to you in the weekly outlook, and you can see that price followed through exactly as expected. On Monday, price was positioned right here, and my expectation was that it would expand directly from this level and target the drawn liquidity above. At this point, I had accurately determined both my directional bias and drawn liquidity from a high time frame perspective. Now the next step for me is to build a 4-hour market context and frame a trade idea on the lower time frame using that context. So now, let's go down to the 4-hour time frame and look at how I built a market context around this setup. This is my draw on liquidity. This is the swing low that we took out, and this is the order block. Right around here, you can see that we tested the order block and then expanded higher. On Monday, the candle opened right here, and we formed this candle just above this order block. The reason I consider this candle to be an order block is because price closed above it. On Monday, I was expecting price to first take out this candle's range low and this specific candle low to test this key level. These two key aspects together built a market context for me. From there, I was expecting an expansion higher straight away. I was also expecting price to take out this range low, this candle's range low, at a key time, which would increase my conviction in the trade idea even more. And as you can see, price did exactly that. It moved lower, took out the candle range low, tested the 4-hour order block, and then expanded higher. Right now, let's go down to the 15-minute time frame and take a look at my thought process. On the 15-minute chart, you can see that we opened here. During the Asian session, we formed a ranging profile. We ranged and consolidated throughout the session. This essentially means we formed an Asian range. During the London Open kill zone, or the London Open session, I was expecting price to form a Judah swing or a manipulation profile, pushing lower below this candle range low to test this discount key level and then expand from there. You can see that this manipulation profile occurred during the 3 a.m. key macro time, which is a significant time window for manipulations to take place, such as purging candle range lows or testing key levels. All of this happened right at that key 3 a.m. time. At this point, I expected price to expand immediately from here with speed. When multiple key factors align at a key time, you must expect price to expand rapidly and with explosive momentum. Right around here, I provided you with the trade signal and outlined this order block. The reason I identified this candle as an order block is that it was the one that took out the candle range low. I was expecting price to test it and then expand from that level. What price actually did was test this candle or key level right here, and then it expanded. These 4 consecutive down-close candles could also be considered an order block. By definition, an order block is a candle, or a group of consecutive candles, that purges a candle range, swing low or swing high, or tests a key level. These 4 down-close candles did exactly that. They purged the candle range low and tested the key level. So this group of 4 candles could collectively be considered an order block. A more refined entry would have been right here, but price didn't offer that. Instead, it tested this order block and then expanded immediately for the rest of the day. This was the third signal I provided to you on Monday, and this was the exact thought process behind it.
Would you like to earn up to $10,000 just from sign-up bonuses? How about copy trading alongside professional traders like myself and these experts right here? With ByteFi, it's easier than ever. That's not all, there's no KYC required for all regional users. Plus, you'll enjoy a lifelong 20% cashback on every trade you make. And when you sign up, you'll also get a 10% deposit bonus. This totals 30% of your total trading budget. The link is in the description below.